Ever wonder why your bank keeps asking you to confirm how much you earn? Like every single time you open the app, there it is again. That little reminder, that polite nudge. Update your income. Seriously, what's the deal? Well, turns out there's a lot more happening behind that screen than just customer service. And once you understand it, you'll never look at those prompts the same way again. So, let me walk you through something wild. Your credit report tracks basically everything financial about you. Late payments from years ago? Yep. Every account you've opened? Absolutely. That store card you forgot about in 2018? Oh, they remember. But here's what they don't have. Your actual income. Not a single dollar amount. Not your salary, not your bonuses, nothing. It's not there. According to former credit bureau insiders, income data simply isn't included in traditional credit reports, and credit scores can't legally factor it in either. Think about how bizarre that is. Lenders know if you missed a payment by 2 days 5 years ago, but they have zero clue whether you bring home 50 grand or $500,000 annually. They're making lending decisions with half the picture missing. That's a problem for them, a big one. Now, federal regulations do require card issuers to assess your ability to repay before extending credit. That came from legislation passed back in 2009. Makes sense, right? You shouldn't get approved for credit you can't handle. But here's where it gets interesting. The follow-up rules gave banks wiggle room. They're allowed to estimate your income using statistical models, meaning they can make educated guesses based on patterns and data. And when you originally applied for that card, whatever number you typed in, most banks never actually verified it. No pay stubs, no tax documents, just trust. American Express is different. They're known for running what's called a financial review. If your spending suddenly spikes, or your total credit exposure crosses a certain threshold, usually somewhere between $25,000 and $35,000, they might ask you to provide real proof. Tax returns, bank statements, the works. And if you don't respond within 2 weeks, they can freeze or close your account. They're serious about it. But most other banks aren't doing that level of scrutiny. Instead, they're just asking you nicely to update your info over and over again. And yeah, it's intentional. Consumer advocates notice this trend ramping up heavily in recent years. What used to be occasional is now constant. Major issuers are hitting customers with income update requests multiple times a year. Some apps won't even let you navigate without dismissing the pop-up first. So why the obsession? On the surface, it's about risk. Total credit card debt in the U.S. recently surpassed $1.2 trillion. That's the highest it's ever been. Average balances per person are over $6,000. Interest rates are sitting above 20% on average. And yeah, some borrowers are struggling. Delinquency rates have ticked up, especially among lower-income households. Banks want to know who's still solid and who might be heading for trouble. But here's the kicker. A Federal Reserve study from 2024 found something surprising. Whether your income goes up or down doesn't always change what the bank does with your credit limit. Some people saw income drop and still got limit increases. Others reported higher income and saw no change at all. The researchers concluded that the real value isn't the number itself, it's engagement. When you take the time to update your income, you're signaling that you're an active, attentive customer. And that makes you valuable. It tells the algorithm you're worth marketing to. That's when the offers start rolling in. Personal loans, premium cards, balance transfer promotions. You're not just sharing data, you're entering a sales pipeline. Now add in the chaos of modern income, freelancing, gig work, side hustles, crypto, passive income streams. Millions of Americans no longer have one steady paycheck. Their income fluctuates month to month. The old system wasn't built for that. Meanwhile, fintech companies are building new models. They're analyzing real-time bank transactions instead of asking you to self-report. They're pulling direct deposit info. They're using AI to assess cash flow patterns. In some cases, They already know more about your financial situation than you've told any bank. So here's what you need to know. These income update requests are voluntary. You are not legally required to respond. If your income went up and you want better offers or a higher limit, go ahead and update. But if your income dropped, or if you're worried about overspending, you can ignore it. Just close the pop-up. Nothing bad happens in most cases. One thing, though. If you do update, be honest. Inflating your income on a credit application can technically be fraud if things go wrong later. Don't play games with it. Either report accurately or don't report at all. Banks aren't asking because they care. They're asking because the credit system is under pressure. Income is harder to track than ever, and they need data to manage risk and sell products. Your salary is one of the last things they can't access without you handing it over. Now you know what's really going on. This content is for educational and informational purposes only. It is not financial, legal, or professional advice. All data referenced is based on publicly available reports and studies as of early 2025. Individual experiences with financial institutions may vary. Always consult a qualified professional before making financial decisions. The creator is not responsible for actions taken based on this content.